Mutual fund industry on a high. Asset surges 17 trillion rupees in 2024. After a stellar 2023, the mutual fund industry sustained its growth momentum in 2024 with an impressive 17 lakh crore rupees surge in assets, driven by buoyant equity markets, robust economic growth, and increasing investor participation. Experts are predicting the positive trend will extend into 2025. Kaustubh Belarpurkar, Director Manager Research at Morningstar Investment Research India, said the mutual fund industry's great assets are expected to continue growing at a healthy pace in 2025, with rising penetration among retail investors. Flows into equity funds, particularly through systematic investment plans, are likely to remain robust. The year 2024 saw a substantial net inflow of 9.14 lakh crore rupees, alongside a significant 5.6 crore increase in investor count and a growing popularity of SIPs, which alone contributed to 2.4 lakh crore rupees, according to data from the Association of Mutual Fund Industry. The inflows lifted the industry's assets under management, reaching an all-time high of 68 lakh crore rupees by November end, marking a 33% growth over the 50.78 lakh crore rupees registered at the end of 2023. This growth was way higher than a 27% rise and 11 lakh crore rupees addition in asset under management in 2023, as well as a more modest growth in previous years. The industry saw a 7% growth and 2.65 lakh crore rupees increase in asset under management in 2022, as well as a nearly 22% growth and close to 7 lakh crore rupees addition to the asset base in 2021. Over the last 4 years, the industry has collectively added an impressive 30 lakh crore rupees to its asset under management. As per the data, the asset under management of the mutual fund industry rose to an all-time high of 68 lakh crore rupees in 2024 till November end, from rupees 50.78 lakh crore rupees at the end of December 2023. This year's tally does not include December number, which will come out in the first week of 2025. The asset base stood at around 40 lakh crore rupees at the end of December 2022, 37.72 lakh crore rupees at the end of December 2021, and 31 lakh crore rupees in December 2020. The 2024 also marked the 12th consecutive yearly rise in the industry asset under management after a drop in two preceding years. This year, growth is in the industry was supported by inflows in equity schemes, especially systematic investment plans (SIPs). Over the last 4 years, the mutual fund industry has collectively added an impressive 30 lakh crore rupees to its asset under management, showing the sector's consistent upward trajectory. The growing trend of financialization has led to a significant growth in participation in equity markets and mutual funds, as reflected in the significant growth of asset under management in the mutual fund industry, said Ganesh Mohan, CEO of Bajaj Finserv Asset Management Company. This shift is supported by Indian economy's expansion and increasing financial awareness among retail investors who are seeking higher returns at lower costs and with a greater convenience, he added. The 45-player industry saw a total inflow of 9.14 lakh crore rupees in 2024 till November, as compared to an inflow of over 2.74 lakh crore rupees last year. The huge inflow could be on the back of sustained investor interest in equity funds, arbitrage funds, and index funds and ETFs. This year's flows included an investment of 3.53 lakh crore rupees in equity oriented schemes, 1.44 lakh crore rupees in hybrid schemes, and around 2.88 lakh crore rupees in debt schemes. Equity schemes, which were the most attractive factor for investors in the mutual fund space in 2024, schemes have been witnessing incessant net inflow on a monthly basis since March 2021. The contribution of equity markets has also been a key, with the Nifty 50 and BSE Sensex indices rising 8.5% and 8% respectively in 2024. The net inflows into equity-oriented schemes stood at 3.53 lakh crore rupees, driven by sustained investor confidence and the structural shift towards a long-term disciplined investing through SIPs. Monthly SIP contributions consistently surpassed 25,000 crore rupees mark in October and November, signaling their growing appeal. Investment through SIP into equity funds has become the default nature of investing for predominant Indian investors on back of structural shift in savings patterns and equity markets continuing to on the decadal growth trajectory is an established trend in India, Akhil Chaturvedi, ED and CBO of Motilal Oswal Asset Management Company said. Notably, sectoral and thematic funds emerged as major attractions, with their asset under management growing 79% to 4.61 lakh crore rupees in 2024 from 2.58 lakh crore rupees in December 2023. These funds benefited from heightened retail interest, supported by 1.4 lakh crore rupees in inflows, including 67,000 crore rupees raised through 40 new fund offerings. Morningstar's Belapurkar said. On the depth side, categories like liquid, ultra short, and low duration funds saw robust inflows, driven primarily by institutional investors seeking short term liquidity. Meanwhile, retail investors showed a renewed interest in gilt and dynamic duration funds, anticipating potential rate cuts in early 2025. Gold investments also gained traction, with the inflows of 9,500 crore rupees as investors sought safety amid economic uncertainties, geopolitical tensions, and changes in taxation norms. Ashish Samaya, CEO of White Oak Capital Asset Management Company, noted that gold's appeal as a portfolio hedge has been further boosted by its integration into multi-asset allocation funds. At the same time, given there has been uncertainty of a U.S. monetary policy, time to time U.S. dollar weakness and geopolitical fault lines being exposed, gold is always a safe haven to have in client portfolios. He added. Starting April 2025, gold ETFs will be taxed as per investors' tax slab for a holding period of less than 1 year at 12.5% for a holding period of more than 1 year, bringing them on par with taxation for equity, Vishal Jain, CEO of Zerodha Fund House said. Adding to the industry's vibrancy, the regulatory environment played a key role. SEBI has introduced measures to boost mutual fund penetration and oversight. The mutual fund light framework simplifies setting up asset management companies, encouraging new players in passive funds. The new specified investment funds asset class enables boutique products to reach more investors with a reduced minimum ticket size of 10 lakh rupees compared to 50 lakh rupees for PMS and 1 crore rupees for AIFs. Thank you for listening. Thank you for watching. Thank you everyone. Bye.